So you want to learn how to trade. Maybe you've seen people talking about making money in the markets. Maybe you're curious about stocks, charts, and price movements. Whatever brought you here, this video is your starting point. We're going to cover everything you need to know before you place your very first trade. What is trading? Trading is the buying and selling of financial assets, like stocks, currencies, or commodities, with the goal of making a profit from short-term price movements. Unlike investing, which is about holding assets for years, trading is about capitalizing on opportunities over days, weeks, or sometimes just hours. It sounds exciting, and it can be. But let's be honest from the start. Trading is a skill. It takes time, practice, and discipline to become consistently profitable. The good news is that anyone can learn it. Step 1. Understand what you're trading. Before anything else, you need to understand the different markets available to traders. Stock trading involves buying and selling shares of individual companies like Apple, Tesla, or Amazon. Forex trading involves buying and selling currency pairs like the US dollar against the euro. It's the largest financial market in the world, open 24 hours a day. Commodity trading involves assets like gold, oil, and silver, physical goods that drive the global economy. Index trading involves trading on the overall performance of a market index, like the S&P or the Nasdaq, rather than individual stocks. As a beginner, stock trading or index trading are the best places to start. They are well regulated, well understood, and have plenty of learning resources available. Step 2. Learn the basic terminology. Every field has its own language, and trading is no different. Here are the essential terms you need to know. A bull market is when prices are rising. A bear market is when prices are falling. Going long means you're buying because you expect the price to rise. Going short means you're selling because you expect this price to fall. A broker is the platform or company through which you place your trades. Spread is the difference between the buy price and sell price. This is how many brokers make their money. Leverage allows you to control a larger position with a smaller amount of capital, but it also amplifies your losses, so use it with extreme caution as a beginner. Stop loss is an automatic instruction to close your trade if the price moves against you by a certain amount, protecting you from large losses. Take profit is an instruction to close your trade automatically once it reaches your target price. Step 3. Choose the right broker. Your broker is your gateway to the markets. Choosing the right one matters. Look for a broker that is regulated by a recognized financial authority. This protects your money. Look for low fees and tight spreads. Make sure the platform is easy to use, especially as a beginner. And, critically, make sure they offer a demo account. Step 4. Start with a demo account. This is the most important step for any beginner. A demo account lets you practice trading with virtual money in real market conditions. You can learn how to place trades, set stop losses, read charts, and develop strategies, all without risking a single penny. Most professional traders recommend spending at least 1 to 3 months on a demo account before trading with real money. There is absolutely no rush. The markets will always be there. Master the basics first. Step 5. Learn to read charts. Charts are the primary tool of a trader. Learning to read price charts, understanding trends, support and resistance levels, and candlestick patterns is a fundamental skill. Start with the basics. Look at daily charts. Identify whether a stock is in an uptrend or downtrend. Look for obvious support and resistance levels where the price has repeatedly bounced. We have a dedicated video on how to read stock charts. Check that out after this one. Step 6. Develop a trading plan. Every serious trader has a plan. A trading plan is a set of rules that guides your decisions. What you will trade, when you will enter, when you will exit, and how much you will risk on each trade. Without a plan, you're not trading, you're gambling. A simple trading plan should answer these questions. What market will I trade? What time frame will I use? Daily, hourly, or shorter? What signals will tell me to enter a trade? Where will I place my stop loss? How much of my account will I risk per trade? And remember the 1% rule we covered in an earlier video. Step 7. Master your emotions. This is where most traders fail. Not because they lack knowledge, but because they let emotions drive their decisions. Fear causes traders to exit winning trades too early. Greed causes them to hold losing trades, hoping for a recovery. Overconfidence after a winning streak leads to reckless decisions. The solution is discipline. Stick to your plan. Accept that losses are part of trading. Even the best traders in the world lose on roughly 40% of their trades. What separates profitable traders from losing ones is not avoiding losses. It's managing them. Step 8. Never stop learning. The markets are constantly evolving. New patterns emerge. Economic conditions change. The traders who succeed long-term are those who treat trading as a craft. Always studying, always improving, always adapting. Read books. Watch educational content. Keep a trading journal where you record every trade, why you entered, what happened, and what you learned. Over time, your journal becomes one of your most valuable assets. What capital do you need to start? The honest answer is start with as little as possible when you first go live. Many brokers allow you to open an account with as little as $100 or pounds. The goal at the start is not to make money, it's to learn. Keep your position sizes small, manage your risk carefully, and focus on the process rather than the profits. Final thoughts. Trading is not a get-rich-quick scheme. It is a skill, one that can be learned, developed, and mastered over time. The traders who succeed are not necessarily the smartest people in the room. They are the most disciplined, the most patient, and the most consistent. Start with education. Practice on a demo account. Build a plan. Manage your risk. And never stop learning. At MarketIQBasics, we're going to walk you through every step of this journey, from the very basics all the way to advanced strategies. This is just the beginning. If this video helped you, please like, subscribe, and share with someone who wants to learn trading. See you in the next one.